Hey, well, good to have you back. It's Mark from Procurement here. I think we're up to video number 4 now, because this is our series on fraud and corruption. As you can tell by the scruffy state of my face, our office is closed because we in New York have heavy snow. No, nowhere near as heavy as they told us it was going to be. So today's lecture is all about fraud and corruption in public procurement, something that I worked on with one of the UN agencies for a few months. So I thought from the basis of my work that I would put a few slides together and put this up. We are actually off to Kiev. So we're off to Kiev in the Ukraine. I'm not sure that exactly what Ukraine needs at the moment is fraud and corruption in public procurement classes, but that's what they're going to be getting next month. So off to Ukraine, fraud and corruption in public procurement. For those of you who don't know me or who are watching this first time, my name is Mark Pritchard. I am, at least in my mind, if no one else's, the guy in charge here at ME Fielding, so we have a few people running around working on various projects at the moment. If you would like some classes, we would love to hear from you. We are always more than willing to come to your country, come to your government, come to your business, and earn some money. So, let's move on. Just before we move on, though, it does say somewhere on the slides, I think, the camera seems to fill the screen, so I have to read off of the slides, that's why I keep looking down. That this is fraud and corruption series, and as I said, I think that this will be lecture number 1 of 2, because looking at the slides, there's only 8 slides, but they do seem to be rather jam-packed full of things to get over. Thank you very much for listening to slide number 1. We will now move on to slide number 2. Okay, so welcome back. Slide number 2 then, remembering that we are looking at fraud and corruption in public procurement. So on our slide, 4 different single items there. The first one I lifted from the ACFE. The ACFE is the Association of Certified Fraud Examiners, which is here in the United States of America. And my apologies to them if I spelled that wrong. They did a big survey back in 2010, which I guess is like 5 years ago now. But they were looking at the different reasons for why fraud and corruption arises. And they weren't specifically looking at procurement, they were just looking in general. And they found that the biggest reason is that controls fail. So if you look at the first line there, that comes from the ACFE 2010 study. And they found that controls fail. So in other words, the company has an internal control memorandum, an internal control system, which has been, I mean, these days you can print the things off the internet, but it tells you how controls should particularly work. And those controls, whatever they are, and controls in this sense is that I always remember when I was studying to be a chartered accountant, because I was in the tax department, and audit was a real problem for me because it was very difficult to conceptualize. But a control just means something like a signature. So an invoice comes in, that invoice has to be signed by the person in the finance department, and then their supervisor as well. So therefore, in that sense, there is a control, and the control fails because the invoice is completely fake and people have just signed it. The other thing is that it's ignored. So there's a control in there that says, their invoice comes in, it needs to be signed by 2 separate individual people, and it's not. They just one person signs it and the thing gets processed anyway. Or thirdly, that they don't exist. We find that control mechanisms do exist these days. I did some work with some NGOs in Africa, in West Africa, in Liberia actually, but before Ebola ever hit, thank God. I hope those people are on okay now actually. But we actually found that even in small NGOs that they were smart enough. They'd gone to the internet and they printed these things off. So, particularly if you're in Western Europe, America or somewhere, and the control mechanism doesn't exist, then you're in trouble. So we've got this idea, therefore, that there is some form of a control mechanism in place, but those controls fail for whatever reason, or they're ignored, or they don't exist. Now, being in a procurement situation, on the grounds that the whole point of this lecture is public procurement, therefore in that situation you would really, really hope that a government has some form of control system in place, and certainly we've seen that big ODA, big donor-aided funded projects, even in Africa, have introduced these things. The problem with procurement, and public procurement is like any other form of procurement, is that people tend to be under pressure to do things. I need to buy a computer. It's urgent that I have this computer, and why the hell do I have to go through all of these bloody rules? Well, if you're a UN organization and it's the consultant talking to you like that, then you have to do it because I say so. If, on the other hand, you are a junior member of staff and you are talking to the Minister of Finance in a country, the tone of that conversation and the tone of the urgency changes a little. And that is where we get situations where these things break down. And that's why you have a control framework, and that's why you have to get buy-in of people. And Mr. Minister knows that, well, he has to wait a week while we get 3 quotes and blah, blah, blah. So this is the ACFE, the Certified Fraud Examiners here in the United States of America. And they said that the biggest single reason was because controls fail, they're ignored, or they're weakly applied, or they don't exist. I've inserted the other 3 from my experience working in procurement fraud. Right, the company's fraud policy doesn't cover procurement, and I do apologise for using the word company here because it's public procurement, so it's the government. But it is amazing in how many countries that the fraud policy does not extend to procurement. Certainly give you a good example. Ukraine, we're talking about the Ukraine, very, very topical at the moment because of the awful trouble that they're having down there. They have just trumpeted because they are getting loan guarantees from the United States of America so that they can buy more guns or whatever. Then what's happening is that the Americans have put a lot of pressure on them to introduce and get up and running an anti-fraud department, and they've done it. The Ukrainians have done it, and I know that there's people on LinkedIn in groups that I'm in that are actually working down there. The problem with it is that Ukraine's fraud policy or anti-fraud group that does not extend to public procurement, and so therefore we have this idea that this isn't going to happen because it's just simply not in their remit. And for the people involved in it, you can't blame them for that. So we have this idea, therefore, that fraud policy does not cover procurement. And you know, in terms of some sort of statistics, it really should, because government procurement is the largest procurement of all, and that's why we need these things so badly. Third on my list is poor segregation of duties. This shouldn't really be a problem in a government department, you would hope, though I guess they will have small departments. Certainly for small businesses, this is a huge problem where you're supposed to have, 2 or 3 different people. One person does the requisition, one person does the procurement, and so on and so forth. And we just have one person doing everything, then that person has an awful lot of power. Again, even in organisations, the UN Organisation for Tourism, they have enough people to have adequate segregation of duties. But once you start getting down to organisations of 5 or 6 people, it starts to become very, very easy, very, very simple to overlook these things and to have people just shopping, basically. Right, so we've got the first 3, controls fail, which is very, very true, and larger organisations you need to ensure, and that's what the auditors do, they do their control testing. Companies' fraud policy doesn't cover procurement. You would certainly hope that it would, and that is easy enough to change. Finally, poor segregation of duties, particularly an issue in smaller organisations, and some government departments will not be that big, especially if they're out in the sticks or something. The final one is 3-way match. This is an exciting one. I hope, therefore, that everybody understands how a standard procurement process works. So a standard procurement process has 4 stages. So we start with a requisition. So the person who wants the goods puts into the computer system, and we're working on the basis that everybody has some form of ERP computer system like SAP. So the person who wants the thing puts it into the ERP system in the form of a requisition. So a requisition means this is what we want, and then they'll put the goods in. There is probably a procurement catalogue, so they go to the catalogue, they choose the item, and they put budget codes in as well to show that we have the budget for this, and potentially we have the cash as well. So the person who wants the goods will raise this idea of a requisition. The requisition then goes to their boss, and their boss presumably will approve it, assuming that we have a boss. Once it's been double approved, it will go up to the purchasing department, to the procurement group, and the procurement group will then raise a purchase order. Now, again, if you're using SAP or you're using Oracle, you click a button, and your SAP Oracle system will automatically generate the purchase order from the requisition. At that stage, it will check that the budget exists, and it will check that the cash exists. And so it will do what's called raising the purchase order. Usually your purchase ledger clerk, or whatever the lady's name, your purchasing manager, purchasing supremo, will approve it once he or she sees that the budget exists. And then that will go for second approval, which may be someone else in the purchasing department. It may go back to the original purchasing group, the group that actually want the goods. So therefore we've got this idea of your first document is a requisition, and your second document is this idea of a purchase order. Now, in a perfect world, what will happen is that the person will have said, okay, I want a new iPhone. The iPhone is $600. So you raise the requisition for $600. Assuming you have an approved supplier, the purchase order will come up. The budget, the cash payable, including all of the taxes, blah, 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 will be $600. And so at that stage, your purchase order and your requisition will match. It's called a purchase order because nowadays, certainly in countries that have relatively advanced ERP systems will talk to each other. Right. That means, therefore, that when that purchase order is approved, so it's gone through budget approval, cash approval, and it's got two signatures from whoever those two people are, one in the purchasing department, certainly, one the second approver, either in the purchasing department or original, is that a copy of the purchase order will go to the supplier. Now, in many countries, that actually is a contract. So at that point, you have issued a contract for purchase. So we have at that point a legal moment. Excuse me, I have a drink of coffee. And I will slow down my voice to let you catch up. We have a contract. There you go. So we're back at the contract point. Remember, requisition, purchase order goes to the supplier. The supplier, assuming it's an iPhone, will then ship the iPhone, depending again on where you are. Either they'll send it by post or a guy will pop around the corner with it. And then your iPhone is delivered. At that point, therefore, you will have something which approximates to a goods received note. Now, for those of you who come across IPSAs, if you look on one of our other websites, you'll see that on one of our other lines in the web thing, what's it called? Website. You'll see that there's IPSAs in there as well. That point of delivery is the point when you, as a purchaser, have a contractual obligation to pay for the goods. So you will get some form of a document which is a goods received note or a delivery note, or if it's Amazon or something, it's just going to be an invoice that's inside the box. Once that happens, you take your iPhone and presumably the damn thing works, and so therefore at that point you have to pay for it, and then you will have an invoice. Again, if it's come from Amazon, the invoice is actually in the box. So the invoice will say you must pay, I think we said $600 for this thing, and then the invoice goes to your finance department. Notice it doesn't go to the purchasing department. We keep the purchasing department, procurement department, away from the money, and the finance department will be the people who actually go on then and have to organise the payment. Right, what does three-way match mean? A three-way match means, therefore, that we have a requisition for the goods, you can't see my hands, can you? You have a requisition for the goods, we have a purchase order for the goods, and we have an invoice for the goods. And those three things should match, okay? Now, they may actually be different sums, but certainly as far as the goods are concerned, what was ordered should match what was delivered. They may not match in terms of sums of money because the person preparing the requisition may not know how much they cost. Secondly, prices may be subject to change. Even though you have Amazon as an approved supplier, you don't know exactly how much you're going to pay because you don't know what's going to be available on the day you open up the website and click confirm my order. So that there may be slight differences, but you should be able to put corrections through in the system so that your invoice matches your purchase order. Right, a three-way matching system in your ER is something that the computer system will do itself. It will match the requisition to the purchase order to the invoice. And the system will certainly try and match those things. And if they are the same sums of money, and it's goods that you're requiring all the time, then you should get this idea of and the system will flag up some form of a thumbs up that says the three things match. Where we start to get fraud is where they don't match. And so therefore we have to look particularly or in particular detail at those items which do not match. And part of your procurement department procedures therefore should be explaining why they don't match. And if you need to increase the value of a purchase order or decrease the value of a purchase order, then that process should actually have an approval process as well. So when we start playing around with requisitions or particularly purchase orders, you'll change your purchase order to match what was finally delivered. There should be a process there of approval. Right, going back at the slide, the ACFE, the fraud examiners, said that biggest reason is because either weak or the absence of controls. I've added in the other three. The first one is that the fraud policy doesn't cover procurement, and that is noticeable, and you see that a lot, and I have no idea what goes through people's minds when they go, we're not going to include procurement, because procurement is the biggest and easiest area when things start to go wrong. Poor segregation of duties. In the 21st century, poor segregation of duties tends to happen in small organisations. Big organisations have heard this damn thing so much from their auditors, or if they're private enterprises, from their shareholders, blah, 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 that they should have all of this stuff. Finally, three-way match. I think with three-way matches, it's important that you understand what, in terms of international procurement law, so UNTITLE and so on that's out there, what is the recommended process. A standard ERP system will have this idea of the 4 stages in the process. So the requisition, the purchase order, the goods received note, and the invoice. The three-way match, or I guess if you want to be super, it should be 4-way matches, that those 4 things should match. So in other words, we should have the same goods that do the same things with the same sums of money across the 4 documents. If they don't match, and there will be a million and one reasons, normal, everyday, logical reasons why they don't match, that the price has changed, or we didn't know the price, we raised the requisition, or whatever, then there needs to be some process for identification and explanation as to why that is. Again, a huge department with people in the government buying goods all day, that's going to be, forgive me, this a little bit of a pain in the neck, but kind of got to do it, yeah? Okay, see you on slide 3 in, hopefully, a few seconds. Okay, so back to slide number 3. I can tell you as well that it's a beautiful sunny day here now. The sun looks beautiful out there, shining off of the snow. So I think we'll cut this down to 4 slides actually, because there's so much information here. We'll just call this part 1. Right, slide number 3. So this is just following on from, I guess as you would imagine, slide number 2. So let's just have a look at some of the reasons why we get fraud occurring. And even again, you have to be really careful with this, because, excuse me, fraud examiners have this notion that everyone's at it, and it's just a case of finding you what you do. But often in these things, just errors occur. So we do get some errors as well. So just running through the items which are over there, down at the bottom left, down below this picture. So the first thing is that delegated levels are ignored. Right. Once you get to the level of approval, so let's assume that we have Mrs. Smith. Mrs. Smith wants a brand new iPhone. iPhones cost $600. She sends it up to the procurement department, and there are 2 people who have to authorize this. The first person may be the person who prepares the I forgot what the damn thing's called now, purchase order, who prepares the purchase order. But the second person will have a level. But level will be financial levels. So someone who is a low manager may be able to authorize up to $500. Someone who is a low manager, grade 3, may be able up to $750, and so on and so on. It will go up to where you get the chief executive or the head of the finance department, the finance director, who can authorize up to whatever. There will be some maximum limit anyway, but whatever that maximum limit is. Now, what often happens is that these delegated levels get ignored. Now, I've actually worked in one organization where this happened. Within the ERP system, it was linked to the HR department, so you weren't supposed to be able to sign off on invoices. Sorry, forgive me, sign off on purchase orders that were over certain levels. So at my level, I was some form of a manager, so my level was supposed to be limited to something like $300,000. But what actually happened was that the guy who was the head of the whole finance thing, he decided that he didn't want to be looking through purchase orders every day. And because I did all the procurement training, and so I needed access to sort of fake invoices at certain times, and it was easier to do that if I had super user rights, so they gave me super user rights. Now, I hope that I never ever abused that. I certainly, if ever I was approving invoices that were over the level that someone of my grade was supposed to be approving, then I made sure that everybody knew that it was happening, and so that people could come in and see. But this idea happens if your approval levels are not linked to your HR system. So your ERP system doesn't know what your level should be. So you have a piece of paper on your desk that says, do not approve any purchases over $100,000. Someone comes to you and says, we need 5 cars. They will cost $150,000. They're all the same car, so it's one dealership. Please could you approve this? And you just click it yes. And that's what it means here. We get this idea that people are approving purchase orders or invoices which are above their delegation levels, which they shouldn't be doing. And it happens for the same reason as the fact that people just go around processes, because people just do not want to wait. And we're trying to run a business, and I can't do this if I don't have this thing now. Blah 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 blah. And then of course what happens is that other people who are not as honest as you take advantage, and then there's a big scandal, and we all get shouted at. So delegated levels are ignored. The next one in your list is interference in the procurement process. Right, this happens a lot. Interference in the procurement process, and it could really be by anybody. But and it goes hand in hand with the next one down, which is process bypassing by end users. You get the answer. We need a consultant to come in, and the consultant needs to know absolutely everything about public procurement. And we've got this guy who's worked for us before, and he was really, really good, so we want him. But we have to go through a process. We have to get 3 tenders. So let's see if we can get a couple of people who really aren't very good, or let's see if we can get, something that just means we get the guy we want. In a lot of ways, as long as it's done honestly, and 9 times out of 10 it usually is done honestly, it's a good process. Why wait 2 months to go through a process to get the guy who we all know is going to win it anyway, and then just let's get the lad started. But unfortunately, we have to go through a process. Where it starts to get questionable is where the person has never worked for us before, or they've worked for us before, but we have no idea what the quality of their work is. And so the people in the end process start pushing us to get, the wife of a friend, or this guy would be really, really good, and you look at his CV, and there's 5 years and he was in prison or something. So it's this idea of interference in the procurement process by people, again, usually 9 times out of 10 because they just want to speed the whole damn thing up, but in some cases not necessarily. And process bypassing is the same kind of thing. I've certainly seen in certain organisations, we have to go through a process to hire this consultant, Mark, so please can you help us prepare the documents? And then some little voice pipes up in the corner, and it's like, oh, can you make sure that you put down there that we have to speak at this one country, Laotian language? I mean, why? And who are you anyway? Never seen you before. And I'm actually the person who's doing the work. I've already been hired, so I have to win this process because we didn't want to wait 2 months. But I'm here already. And you're like, okay, not really quite right. I can't guarantee you're going to win and get paid. And then, of course, you're the bad guy, aren't you? And until everyone's in court because there's no money left in the bank account. So those are your ideas. This idea of interference in the process, or just simply bypassing certain controls. We'll come on to this probably in the next part of it, but it's a big, big problem. And again, you have to be careful. We don't want to be accusing people in production departments, whatever, of being criminals, usually done for all the right reasons. But you have to be boring and go, no, we have a rule. We have to stick by the rule. Because one day you're going to get caught, and then one day you're going to have to, and it's you that's going to have to explain this stuff. Right, number 4, illogical splitting of orders. Right, illogical splitting of orders means that you want, who knows what you want. You want a car. Is the car a good idea? You want. Let's assume that you want some computers and you want some monitors. And you would expect that they would all come from Best Buy or Currys in Britain or Eldorado in Moscow, wherever. And instead of just ordering the whole thing from one supplier, you find that they split it. So the computers are coming from one country, from one company, one supplier, and the monitors or the keyboards or the mice or whatever else that goes with these things is coming from a different supplier. And it doesn't make any sense. Because if you were going to go buy yourself a computer, you wouldn't buy a computer and not buy a monitor, assuming you're buying a desktop. From the same shop, why would you shop around for these things? Get them in the same place. Right, that is the logical splitting of orders. It is, what we call the good old, the magical words, the red flag that we're all looking for. And it's usually a red flag because for whatever reason you're trying to put part of the order into someone's lap somewhere, and that person is, your brother, your friend, or you owe them a favour, or whatever the reason is. So look for illogical splitting of orders. At the end of the day, if things don't look right, just put it in an email and send it. If they reply and go, oh, it has to be that way because I need a special monitor because I'm blind or something, then fair enough. You have it in. You've asked the question. You've done your job. And if you're really, really concerned, then you will obviously, as part of your procedures, have a hotline or a boss or something like that. So, process bypassing to end users, we did that one already, didn't we? Illogical splitting of orders, this idea that the order is split and not logically. Right, changes or deleting to vendor details. This is really, really important, and this is one that comes up. And working in big international organizations, every year there's 2 or 3 people who do this. What they do is they go into a vendor and they submit their own bank account details in place of the vendor's bank account details. And so therefore you buy your iPhone, you click pay, the finance department goes, it's been paid, and then 2 weeks later the vendor phones up and goes, when am I going to get my money? And you send them a copy of the bank transfer details or whatever the printout is from your computer system, and they go, oh look guys, that's not my bank account. You can do this many ways, but usually in your ERP system it's done through a series of controls. Any changes to vendor details have to be made and then approved in the same way as a normal payment. And in addition, if you have got a good system, a big system like SAP or Oracle, you can do things like run bank details, and once a week it will just run a report. You do it 1 o'clock in the morning, and it will run a report, and it runs a report that compares vendor bank details to each other and also to members of staff. But the reason that you do it together is because what you're trying to stop is a situation where you want to buy an iPhone, you have to you have to have 3 suppliers, and so you have three different companies which are all actually one company that come forward, and then you've fulfilled your requirement, but it's all actually the same guy, so we can't lose. Yeah. And so that's why you do that. And again, you can get the IT department to set this stuff up to run at 1 o'clock in the morning, and then there'll be a printout on in your email when you come down the next morning, and hopefully there'll be nothing there. So changes or deleted to vendor details. The final one on the list is social engineering. I think I must have copied this from someone else's presentation. I haven't seen this in the sense of people committing fraud, but obviously we read about it in the newspapers, and the New York Times and so on loves to tell us these stories. Social engineering is the situation where you get an email, and the email says, oh, there's been a problem with the payment. Please can you just send us the payment details in the email? And so you send them back, and then of course then someone else has all of your bank details, and then if they're smart they can go in and start making payments. There was a great one I read about which was in Ceylon, and there was a guy in Ceylon who found out that Venezuelan oil companies all use the same bank in New York to make all of their payments. It's all in US dollars. So he submitted a letter to the bank in New York saying that this oil company owed him $10 million, and they paid it. And in fact, they didn't just pay it, that was it. Nobody even noticed. And then 3 or 4 years later, he decided he would do it again, and the second time round he got caught. So you send me that, I'll Google it, see if I can find it, if anybody wants it. But the guy was in Sri Lanka, and it was the second time he'd done it, and I think it was $10 million that he was after. So this is just, again, procedures that people should have. Again, if you have an ERP system, which is SAP or something like that, your system should be picking up if you're getting spam emails, and so on. It should be deleting them and so on. But we should have rules, which now we don't ever send out any personal details, we don't send out bank account details, etc., 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 which are included in emails. And, this stuff. My brother was a prince, and he has $25 million. Please send me your bank account details and $500, and we'll give you a nice big fat commission on $25 million. I mean, but these things are still going, and not only are they still going, but people are still falling for them. So make sure staff are aware. Okay, that was slide number 3. We will do slide number 4. See you in a minute. Okay, so I took my jumper off, and the recognition is just how hot it's got. So be still there, be still. Right, slide number 4, therefore. What we're looking at now is the various phases that we have in what would be, I think, when we look at these slides, a very large-scale procurement process. And public procurement, so it's for the government. Slide number 4, therefore, covers the first 2 phases, and slide number 5 will cover the other 2 phases. Some technicians say there are 3 phases, some say there are 4. I prefer to think of it as 4. So the first phase is planning. So just think what you're doing at this stage. You're planning a large-scale procurement. So let's assume you want to do something like one of my favourite countries in the world, Russia, is currently planning for the World Cup, something that I'm certainly intending to be sleeping on friends' couches so I can go and watch. So at this moment stage, let's assume that they are into the planning process. Right, what are the kind of things that they're going to be doing? Well, the first thing that they'll have is they'll have a procurement plan. We always have a procurement plan, and as the name suggests, it's not very hard to deduce what this is. It's a plan for our procurement, which will show cost, the kind of things that we're looking at, and when, so that we can also plan things like our cash flow. And you know, if you're doing something like building football stadiums, you also need to know when goods are going to be delivered. One of my clients back in Scotland was a shipbuilder, so very, very important, not only that you knew what was arriving, but when it was arriving as well, because you had to make sure that you had space in the warehouse and whatever for enough bodies of steel and so on. Otherwise, what the hell do you do with it? So we have this idea of a procurement plan. So the controls that you have to have, therefore, over your procurement plan is that when the thing is being prepared, we only include in the plan what we know that we actually need. Okay? So we don't get this idea of padding. And many organizations will do this. You know, firstly, there's the idea of let's ask for too much and then we'll be knocked back to what we actually want. And secondly, you know, if you can have unlimited procurement, then what the hell, let's just go for it and see what we can get this year. It becomes a little bit of a game. So your procurement plan should be based on what you need when you need it. And the point of this document, therefore, is that it's subject to scrutiny and approval when it's prepared, so that we have a collective agreement, or a collective agreement on what it is that we want. Then later in the year, if we start making purchases which are not in the plan, we should be able to also provide a justification. If things are in the plan, then we're just buying what we plan to buy, and everyone agreed on that back in January. So the approval process becomes much faster and sharper. So that's this idea of a procurement plan, and we're just ensuring that what goes into it is what we need. And you do that in my review, fairly straightforward. Right, where can things go wrong with advertising? There's a couple of, there's many areas with these things. The first thing is to make sure that you advertise in the right place. Now, most large organizations will have a procurement board. So if you go to the UN, for example, the organizations have a procurement board, and companies wanting to do business with them will know, hopefully, where this damn board is. It's publicly available. So anyone, anywhere in the world can, in principle, pitch their goods and try and procure some goods against requests for procurement. So that they put up, you know, call for proposals, call for tenders, whatever you want to call it, and people will bid against those things. So we get this idea of making sure that you are advertising in the right place. What you are looking for is advertisements which are not going on that board, or with smaller organizations that maybe don't have the resources of the United Nations, advertisements not going in local papers so that lots and lots of people can see them. But what you're trying to prevent is that the person picks up the phone and says, "Hey John, we've got a tender coming out, we want you to tender for it, here's a copy of what we're going to be looking for," and then an advertisement goes into a magazine that nobody ever reads, nobody ever looks at, and so that guy becomes the only person who tenders. And other suitable organizations who could provide the quantity, quality, etc. At a reasonable price and so on don't tender. So advertisements go in the wrong place. Another very popular one is to miss out of the advertisement a key piece of information. So we need someone who is going to do a study in Africa on the effect of taxation on women's rights, and we need that person to work for 6 months. They need to have experience in this field, blah, blah, blah. But what you don't put into the advertisement is that that person must be fluent in Portuguese language, because one of the countries involved is Mozambique, and they have to be able to interview people. But of course, John, who's your friend, or Joanna, who may be more relevant for women's rights, she knows, and she happens to be fluent in Portuguese, and so you only get one person who meets the criteria when that comes through. So with your advertisements, the objective of the exercise is to make sure that there is as much there as possible that people can use, and that it's going in the right place, and everybody gets an equal chance to bid. And the object of the exercise being that you get as many qualified bidders as possible to make the process as good as possible and to get maximum number of people. Excuse me. I blame my kids. They bring everything home from school, including disease. Right, bidding documents. So in your bidding documents, therefore, you will have technical documents that will tell people what it actually is that you want. So again, in your technical documents, it's the same as the advertisement. You have to include everything in there. Again, if one of the technical requirements is that the person is completely fluent in Portuguese language, then that has to be in the document somewhere, and everybody must know about that. So with our bidding documents, and it's very close to advertising, full information, all of the information as well about how people bid, what do you expect to see, a standard bidding process, you want to see a technical proposal, then if you pass the technical, we'll look at the financial, so you need 2 different envelopes, where do we send them, what's the format, what's the closing date, if you have a bid protest, who do you protest to, what is the process, and what's the publication of queries. So if somebody says, well, do I need to be able to speak French or Portuguese or whatever else, other languages in Africa, that not only question is answered, but also that all of the other bidders can get to see the question and the answer as well. And so on and so forth. So complete information is in all of the documents, and it's completely clear what the process is. Usually as well, if there are questions on the process, and if you build in buildings that are hundreds of millions of dollars, then there will be a lot of questions. There needs to be a full explanation of what is the process that we're going to go through of building it, blah, blah, blah. Phases, quality, when we finish, architect certificate, it goes on and on and on. Everything needs to be there. Okay, that's at the planning phase. So this is the idea before we even start. Remembering that our process, as far as we are concerned, is the procurement process. So therefore, that's your planning stage. Your second stage is the bidding phase. So with the bidding phase, now what's happened is people have got your beautifully drawn up documents. The documents perfectly explain exactly what they need to do, who they need to do it to, and where they need to do it. And now you've got your bids coming in. So usually what will happen therefore is that we'll get some process of shortlisting. So from the 25 companies that bid, we will usually cut those down to who knows what the number is. It will vary from country to country and organization to organization. But let's assume that it's something like 5. So therefore there will be some process where we are looking at these ideas. Very often at this stage we will just look to make sure that people have met all of the requirements. So it's almost like a job interview where the first part of it is done by HR. HR writes the job requirement and then the department checks that it's okay. They then receive, if it's like the UN, normally they receive 200 to 300 applications for any job. Of the 200 to 300, you will find that 25 people actually meet the requirements. So they know the languages, they're not just taxi drivers chancing their arm, or people who used to work at the UN and hope that their experience will carry them through to move from the finance department into mine clearance or whatever. And then once you've got down to this idea of, let's say, 10 to 20 people, you get this concept of a long list. And at that point, the department come in and they will start to look. So we've got, it's called here shortlisting. So we've got this idea of cutting down from all of the bidders to a certain number of bidders who we will consider. Again, at this point, there needs to be an open and transparent process. So we need to tell people what that process is. What you don't want is that your procurement committee already knows who they want, so they can get rid of the good people. It's this idea that we know we're going to have to go through some interview process. This guy's a good guy, he might be suitable, so we'll get rid of him because we know we want someone else, yeah? And let's bring in the idiots. So therefore, at this point, what is the process for shortlisting and what will we actually do? Right, we're going through fairly serious stuff now. So pre-bid conferences. Pre-bid conferences, again, would be this idea where you're telling people what they need to do. You're looking for clarification. Certainly projects I've worked on, so working on IPSAS implementation for Ministry of Finance of Russia, for example, they had a pre-bid conference. We knew that at the shortlisting stage that 6 different companies had been accepted, or 6 different companies had been shortlisted, and so the 6 of us were able to go along and were actually able to ask any questions. And also it was an opportunity for the Ministry of Finance to meet the different consultants and say, well, I don't really know if I want to work with that guy. And it's also a good opportunity as well because some people will write on their CVs. One of the things in Ministry of Finance in Moscow was that you had to be able to work in Russian. So of course they came along, and then there was guys sitting there with translators, and you're thinking, and you're going to be able to write a report in Russian language, you know? So therefore the pre-bid conference is useful for doing that. Bid submissions. So bid submissions, again, we kind of talked about this. What do you need to send? Where do you need to send it? When do you need to send to? Again, astonishing looking at the number of people who just don't send in the right thing, you know, or even worse, they send in the financial proposal and the technical proposal in the same envelope, and you're kind of not really supposed to see them together and stuff. So making sure that people are 100% certain on the process. Other things that you're looking at here as well is that very often for certain pieces of information to try to offset the cost of the procurement process, you will have to pay for certain pieces of information. And certain companies that don't want to pay will try to avoid paying. So they'll submit God knows what to God knows who, just in the hope that it ends up on the right person's desk. So you need to make that clear as well. If you haven't got your check, you ain't getting our business. Yeah. Finally, bid tender opening. Right, the whole point of bid tender opening is that usually that you have 3 or 4 people in a room. You can see that the things are taken out the envelope, and you're trying to avoid people who kind of sneaking in a last minute envelope, or the lowest bid is $50,000 bucks. They'll come in at 48, and then an envelope with 48 appears through the window. I've actually seen these as well, where there's been a bid and it suddenly appeared on the table, and the space for the price is blank, and someone's actually written in the price of at the actual meeting. So these are kinds of things that you're trying to avoid as well. At that stage, usually nowadays, for reasonable sums of money, people are there with video cameras, and you can just video the whole thing and upload the video onto the company's server, and then nothing can be done. You don't want the bids lying around in people's drawers and stuff. One of the case studies that when I was at the UN, the guys who wrote the material had in there was that the bid was opened and company ABC had won, and then someone came in at the weekend, took the bids out of the envelope and put a lower one in. So when they all came back in on the Monday morning, there was a lower bid, and there was no recording process, and one person had opened the bid, so she was kind of stuck. Kelly was her name, actually. So this is the whole idea, that the whole thing is transparent, and at that stage, usually what happens as well is that we announce the winner. So if you have a video, you know the winner is, I never win anything, but my wife, so the winner is Lena wins. And then there's your video uploaded onto the server, so it's sent to 25 different people, so you can't change your mind later on. Right, I think when you kind of talk through it, it's fairly kind of straightforward. If you're in a country where people aren't doing this, then get in touch with us and we'll talk it through. You know? But it's not a different concept. Getting people to actually do it in real life is really not quite so easy. Okay, so slide number 5. Let's make this the last one. That's right. You're free. There's that kind of psychological burst of energy that comes through you. Right, so we looked at the planning phase and the bidding phase. So the phases that we've gone through, therefore. Planning is this idea of how are we going to go through this. The bidding phase is the actual process of receiving the bids from the individual contractors who want to win our business. Because we are a government, it is public, and it is procurement, so we are buying something. Stage number 3 is evaluation. So now what's happened is that we've got our bids in, we've opened our bids, and remember I told you that we have videoed this whole process, so everybody knows exactly what we've got. So evaluation, I think actually on slide 4 I started talking about who'd won, but the whole point of evaluation is that this is the stage when we decide who's won, so we are evaluating the bids. So the first thing that you have there is your evaluation committee. The whole point of this is that your evaluation committee, therefore, should be people who do not have a conflict of interest. Quick plug, go see my videos on conflict of interest. So it should not be people who have a conflict of interest. It should be people who have enough technical knowledge to be able to assess the bids, again, without being so close to the process that they're not impartial. And again, there should be enough people so that if there is one guy there who's going, ooh, give it to company ABC, give it to company ABC, the rest of the guys who can see that this is nonsense can just go no. So we've got this idea, therefore, of what is the makeup of your evaluation committee. Usually, I think for most big stuff, they would have kind of like 4 or 5 people. Some companies bring in consultants, so if you have, a really big procurement, bridges or something, you want to make sure you've got an architect, a civil engineer, someone who knows something about construction, and probably just a member of the public as well, to add some little bit of common sense to it. So we get this idea of the evaluation committee being independent, and also, I guess, the idea almost of segregation of duties, so you have enough people to ensure that you've got some independence there. Right, the evaluation report. Well, what will happen is that there will be a grid against which you assess your bid. So the bid will be assessed, certainly for technical grounds, on who knows what. If it's a bridge, I don't know anything about building bridges, but, how big it is and how shiny it is and how many cars it can carry and how long it'll take. And then there'll be the costing. So the costing will include the cost of steel and the cost of labor and all these other costs that builders seem to put into damn everything. So your evaluation report will show that your shortlisted bidders, so let's assume you've got 5 bidders, that your shortlisted bidders have, first of all, met all the technical requirements, and then you will evaluate them against the criteria. The object of the exercise, therefore, is that you are finding out which one is best. So which one is the best, and then on the basis of that you'll rank them. So you'll come up with some little league table. Most places, again, 70% of it will be technical, 30% of it will be cost, and then will be some function that says this guy's the cheapest, so he gets this many points, and then everyone else who's more expensive gets a reduction in points. Depending on your type of procurement, it may be as well that we just take all of the people who meet the technical requirement, and then we just simply take the lowest. So if you want generic items, balls of cotton wool, which are being delivered to UNICEF, right, this is the technical requirement of the cotton wool, that it can absorb this much blood or liquid, whatever. Okay, now here's the cheapest. If you're going for something like a bridge or something like a consulting agreement, then you're looking for value for money. So it's not necessarily that the cheapest guy will be the best. So then you need to include your cost in it. Right, your evaluation committee, independent groups of people. Your evaluation report shows that you have been consistent and that you have used the evaluation grid to evaluate them. So in other words, your bidders have been evaluated against the criteria which you set as part of the planning phase. Have there been any changes to those criteria? And that's what you don't want. You don't want the criteria to start changing halfway through the process, because if it does, then you get, but this company wasn't quite so good because their steel's a bit expensive, but look how shiny their bridge is. Let's increase the prices for how nice it's going to look on our come to our country tourist cards. So therefore, you don't want this to have changed. So your evaluation report shows that and these things should be sensible and logical and approved by. It should have been approved at the planning stage, actually. Your tender award committee, the slide is implying that these people are different. So this must be a really big project. But for whatever reason, your tender and your award committee are going to take your evaluation report and then on the basis of that, they're going to actually make the award. So they're going to grant it to someone. The reason that this may be important is at this stage because you now may begin kind of negotiations. So this is what you've tendered, but we actually you're the best bid, but we actually kind of need a little bit more of this. So we'll pay a bit more money, but we want something extra. Well, this is something we don't need, so we want to cut that out. And if we cut that out, can you make changes? This is an idea, and it's coming up under contract management as well. But this is the point, therefore, where the tender does not 100% match what you need. So you've decided more or less who you want, and therefore you have to massage what they've asked you for, get it changed slightly, and there will be adjustments in the price. This will be another process that you need to look at very, very carefully, because the question is, therefore, do you just do this to the best company, or do you do it to all of the companies? And I've certainly seen items in the past where a company has been very good. They've won a tender, but they can only do 5 of the 6 requirements. And then when as a committee you go to them and say, well, look guys, you don't have a specialist in how inheritance tax affects women's rights, for example, women's right to inherit. And the company's going, oh, we can't do that. And so at that point, they've kind of lost it. You go, but it was in the bid, and they go, this other guy goes, I can do that, I can do that. So do you split the contract, or do you go back to another supplier? And this is all stuff that should be written down in the rules before you start. Okay, so we've got this evaluation stage, the evaluation committee, the evaluation report, and the tender and award committee. The tender and award committee may be there just to add some gravitas, just to add an extra layer of independence. And if it's a big project, you'll find that your chief executive wants to be the chairman of that committee. Also, in practical terms, if it's going to be something that will be subject to negotiation at that stage, then they may come in and then begin negotiating with the tender. Right, that's your evaluation stage. Finally, contract management. Right, contract management therefore is implying now that the contract is actually due to kick off. So the first thing is drafting the contract. But once again, this is your actual legal document, and having been the owner of a construction company, there's no big construction project that ever doesn't end up in court. So this is setting out the rules of the game between you and the contractor. It should be set out very much based on the tender and what you agreed at that stage. And usually at the drafting of the contract stage, there isn't that big an argument. What the contract means comes later when your building falls down. But contract management, so drafting the contract, so usually then you'll definitely have to have lawyers and certain types of engineering specialists if it's a big project here. So drafting the contract, and what you're doing is you're making sure that all of the necessary clauses are in the contract. So not contracting to buy a training course and then finding that the rights to the training course remain with the writer, as I've seen 2 different organizations do. Right, delivery. So what is the time frame of the thing? If you're just buying goods, at what point do they need to be delivered? How many need to be delivered? Where do they need to be delivered? And these are particular things that will go inside of the contract. Obviously, if it's a big construction contract, then what do they actually have to do to meet the terms and so on and so forth. So delivery is fairly straightforward. Again, you need to look at delivery. Our point is what can go wrong with procurement. What you can find is that if you're trying to catch people out, that we pay on the 1st of January and delivery is on the 31st of December. So the guy gets a free working capital loan for a year. And so those are the kind of things that you're looking for. And you do see them. Certainly in places like Russia, I've seen stuff like that cropping up. Finally, contract changes and variations. So contract changes and variations obviously have to be managed. And this is a professional art. You sign a contract. You sign a contract to provide certain goods for a price. You've lowballed to get the contract, and lowballed means set the price very low. And then now you've got the contract, you try to change the deliverable. So we don't deliver a couple of items, or we do deliver them, but we deliver them with cheaper input. Being in the training game, well, you see this a lot, and there's so many, quote, reputable training companies that do this. They tender for contracts with very highbrow, dare I say, people like myself, with 20 years experience of traveling around Eastern Europe teaching courses. And then when the company turns up to get their training course, they find that it's local Joe from the local university who has never stepped outside of Georgia in his life. And not that I want to say that the local people can't do the job as well as I can, but they were not the people that were included in the original tender, and they were not the people that the original cost was calculated on. So it's this idea of changing things in the contract changes and variations. Particularly with delivery. Training, we see it. You substitute your worldwide expert who you told everyone you had to have when you won the contract from USAID with a guy who's the local ACCA lecturer from the local university, and you get it in production contracts as well. Sometimes this stuff is just unavoidable. There's a shortage or something. You've seen it in food production things. So we've had coffee shortages, for example. People just can't always get their hands on the stuff that when they tendered they thought they would be able to. Many organizations have limits on this stuff. So if they decide that 20%, for example, has been changed in the contract, then the contract is cancelled and you have to re-tender. Now 20% is easy to calculate when you're looking at cost, and it will always, either it will have gone up or the volume of goods will have gone down by 20%. But when you're looking at certain other things, is the guy not the guy we contracted with? The guy's a worldwide specialist in fraud, but unfortunately he's here to teach 16th century Mexican art. Seen that one before. does that constitute 20% difference? So again, if we're getting to the point where the contract is changing and changing and changing, and we're getting variation after variation, then you have to draw a line in the sand and say, so. Okay, this thing was originally meant to be 8 slides. Now we've had 5, and I think we've still got another 4 left. So this will end up being presentation number 1, and there will be a presentation number 2 to follow this. I think having gone through the slides with you just now, but obviously in my mind as well, I think what we need to do as well is we need to put another one in, which is just 15 minutes on just what is the procurement process. So I think I'm going to go through and find the procurement process video and off SlideShare, and then I'll change it to meet our needs. Okay, hopefully see you in part number 2. Enjoy the rest of your day. Go pick my daughter up from school.